Would it be wise to sell gold for silver? I don't know. I think that Bix Weir would tell you it's wise to sell gold for silver. If I had one trade and one trade only, a genie comes out of a bottle, I'm buying gold. Why? It's the only other tier one reserve asset in the world, period. However, with that being said, silver is the most undervalued asset in the world, and that gold to silver trade, silver to gold trade, gold to silver trade rather, is probably the trade of a generation. And I don't say that lightly. I truly mean that. It is the trade of a generation. And there are very few things that I've ever seen that exhibit the asymmetrical risk reward of silver, meaning what has the lowest downside and the best upside? Undoubtedly, it is silver. And even though gold is that tier one asset, silver is being wickedly and massively accumulated by countries like India and China. If you've watched any of my last few shows, you know I did an interview with Sean Kun from Dolly Varden Silver, who confirmed exactly what I've been saying, that indeed China is flying all around the world as the second largest producer of silver in the world. Now, everyone knows they're big into gold. They're number two in production of silver, maybe even number one, just because they don't tell us how much they produce. But they're flying all around the world and buying unrefined silver in the form of doré bar, in the form of concentrate, and they are buying it directly from the miners, paying close to double what the West will pay, shipping it home and refining it there, because they've already done all they can to drain the COMEX and to drain the LBMA. Even they're continuing to slowly do that. They're getting to the point where, you know, the cupboards are becoming bare, and it will cause too much attention. So what do? You go directly to the refiners in Latin America. You say, don't go to the commercial banks and fund your operations. I'll buy it from you right now in doré bar and concentrate. For those of you who don't know what a doré bar is, it's a bar that is refined by the miner to maybe 40 or 50 or 60%. It's an ugly, ugly bar, but it's a way to send it to the refiner to have it refined into 3.9 or 4.9 silver. And so it's a bar before it becomes a bar. Well, the same thing is true with the concentrate. It's kind of like sludge. And they will bring it home and refine it. And when you talk about the refining capabilities of the Chinese, not only is almost 100% of the rare earth metals refined mined in the Eurasian continent, 100% of all the rare earths were refined in China last year. So they're buying it from the miners. They're buying it in a way the metal does not come off the exchange, and they are refining it in China. So let's get back to the question, should I trade gold for silver? Where we are right now at let's call it 2520 divided by 2885. So what do we get there? 2520 divided by, let's just call it 29. You're at about 87 to 1. That's happened less than 0.5% of the time in human history. It hasn't hardly happened at all. And so it's an anomaly. It's coming out of the ground right now at 7 to 1, according to all the mining execs I talked to. And you know, you got people like Keith Neumeier, who was saying it publicly, coming out and saying it's coming out of the ground at 7 to 1 ratio, 7 ounces of silver for every 1 ounce of gold, yet it's priced at 87 to 1. You could argue it's 11 times undervalued or 12 times undervalued. And from a standpoint of a once in a generation trade, yes, it is probably the right thing to do.
Silver is trading at 87 to 1 compared to gold, yet it's coming out of the ground at only 7 to 1. This massive disconnect means one thing: silver is wildly undervalued, and we're witnessing what Andy Schectman calls the trade of a generation. As China and India quietly accumulate silver, draining global reserves, a price reset is looming. This isn't just speculation. It's a coordinated strategy that could flip the entire precious metals market on its head. With over 800 million ounces of silver already imported by India since 2020, global stockpiles are vanishing fast. Meanwhile, US investors have barely scratched the surface, underestimating silver's true value. When the dust settles, those holding silver could see gains unlike anything before. Don't miss this opportunity. The clock is ticking.
If the genie said, you have 2 trades, the genie said 2 trades. Well, I'm buying silver right now, and I then switch it to gold when the ratio corrects. If it's coming out of the ground at 7 to 1, but it's came out of the ground at 16 to 1 for 5,000 years, that means that the in-ground ratio is disappearing. And as I've said a million times, Silver is found in nature in a form called epithermal, like your skin is epidermis. Epithermal means right at the surface. Of all of the silver that was mined last year, roughly only 25% of it came from companies that actually mine it. The majority of all the silver that comes to market is a byproduct of mining all sorts of other elements like gold or copper, zinc or lead. And hey, we found some silver and we send it to the marketplace. So it's disappearing. It's disappearing in nature, but it is increasing in its demand uses in green, in digital, in industrial applications. And of course, as I've talked about ad nauseum, and I will give credit to John Little of the Pickaxe for his amazing investigative work in showing how silver used to be calculated in the supply-demand figures for military applications and the massive amount of silver that is needed in the high-tech weaponry field, whereby there's 500 ounces in the tip of a Tomahawk cruise missile, where in 1942, according to Senate Subcommittee hearing S.2768, they talk about 200 million ounces of silver being used for military in 1942. Well, where are we right now, where the level of sophistication of this military weaponry is so much higher that the need for silver is off the charts? Is this why 8 commercial banks are stepping on the price of silver? Unlike any commodity they have ever done, it has the largest concentrated short position in the history of any commodity ever traded on COMEX. Is this why silver is distorted? Why the hell would 7 Western banks be stepping on silver the way that they are if it weren't really important? If it weren't maybe more important than we're led on to believe, because it is needed in the military industrial complex. But what is happening as we look at the draining of the supply on the LBMA, where we've seen massive amounts of silver drained off of the LBMA in a very short period of time, where, let me see if I can give you the actual numbers here. Just in the month of August, we saw 27 million ounces, or 8.1% of the total London float of the 300 million ounces that are available. 27 million ounces in 1 month were delivered. Does that sound like normal to you all? You see, all of these countries, none of them were ever sophisticated, coordinated, or motivated or wealthy enough to drain the exchanges. No one ever stood for delivery. But when you see the amount of gold and silver that is being drained off of the exchanges, just off of COMEX in the last, let me see the numbers here. Where did I put that? In the last, since 2020, the amount of metal that has come off of COMEX, 24,072 tons have come off of COMEX. That's about 80 million ounces, or excuse me, 800 million ounces. That's almost exactly the amount of silver that India has imported since 2020, about 800 million ounces. That's 2.5 times what the LBMA has available to be delivered. And the LBMA admits basically to trading 2.9 billion ounces of silver per day. That's 3.5 times global mine supply annually. It's 90+% paper, and it's all a bunch of nonsense.
But here's the question. David asked the question. He said, I know you're a bigger proponent for gold. I know what you've said about silver, but what's the likelihood of silver ever realizing its true value?
It will. And this is why, because now the exchanges are being bled dry by the countries that are motivated, sophisticated, coordinated, and wealthy, and they are standing for delivery. So they drain the COMEX, they drain the LBMA, and then they're like, well, we better back off a little bit. So let's go directly to the miners in Latin America and buy the sludge and the doré and bring it home and refine it. They're playing the long game. Just the same way that India has imported 700-800 million ounces in the last 3 years. The only way you can successfully manipulate a market over a period of time is to push it in the direction that it is going. So to answer his question, yes. The right answer would be, if you have the inclination to take advantage of what I consider to be the finest speculation I've ever seen in my career, and a coordinated, calculated one that has the lowest downside and the highest upside, that's called asymmetrical risk reward. Yeah, you buy silver now and you switch it to gold. If it just gets to its 150-year average, price average, not God's average, which is the mining ratio, but man's average, the stupid price that was set because of gold's role as money and silver's role as an industrial, that's a double. And if it gets anywhere near when it's coming out of the ground at, that's 10, 11 fold. Could that happen? yeah, why not? At some point, that has to sync up.
Now that you know about the silver trade of a generation and what's really happening behind the scenes, you're definitely going to want to watch the next important video from this channel. It dives even deeper into how these market shifts could impact your financial future. So don't miss it. Hit that like button, leave a comment, and make sure you're subscribed so you stay ahead of the game. See you in the next one.